going to jump straight into this. For anybody that joins late, we do record this. We record every session. We have it on our YouTube channel. Go check it out. Just subscribe. You'll get updates with all of our videos. Because we've got so much content and not that much time, I'm going to dive right in. So most of you should know me by now. If you don't know me, this is basically my speaker page. Please go and and subscribe to my YouTube channel, Lauren's Property Coach. And then I also just want to let you guys know that I am releasing a new book. It's going to be called Generational Wealth Through Property. It is coming soon. July 2021 is when it will be in the bookstores. So I will be obviously marketing this more and more as the days get closer. But if I've shown you any value on these webinars, please support me and buy a copy of my book. If you know my story, I am destined to be a writer. That's what I love to do, and that's why I got into property. So if you can help support my passion, I'm happy to keep doing these webinars for free. Now, the good-looking gentleman on the call tonight is Mncedi. And Mncedi, without stealing your thunder, why don't you introduce yourself to the audience tonight?
See, and I must say that I did not pay him a single cent for him to say that I'm good looking, you know?
You should have done.
Good evening, ladies and gentlemen. As he says, my name is Mncedi. I am a real estate investor. I'm based out here in Johannesburg. I'm also a property coach. So I started my journey a couple of years ago, straight out of varsity, doing the whole corporate career thing, and I had to diversify my income because black tax, right? So I'm active in the Joburg market. I'm doing multi-family rentals from a strategy perspective. I love fix and flips. And I've also got a couple of single-family rental properties. I am accelerating my portfolio right now, and we're getting into student housing.
Nice.
And growing the portfolio.
Now, Mncedi, we've known each other, for 4 years, eh?
Yeah. Actually, as a matter of fact, our very first meeting was in this month of February, 4 years ago, when I was fresh in property. And
for those of you who don't know, I was Mncedi's coach back in the day. About 4 years ago, we had our first meeting in Four Ways at a place called Throbbing Strawberry. And when he sat down, he said he was going to be the best student I've ever had. And I've heard that so many times, and I thought, yes, this guy's blowing smoke. But the reality is, 4 years down the line, these are just some of the deals he's been involved in. Mncedi, do you want to just tell us high level what these deals are about?
Yeah, 100%. So pretty much, as you saw in the previous page, I do flips. You'll see the ones that have got profits. Those are flips that I've done. The ones that have got income, those are the ones that generate passive income. From single family rentals on the top left, and that was the very first property that I actually bought, which helped me to kickstart my portfolio, because I used that property because I had owned it for like a couple of years, and I pulled equity out of that to actually start purchasing some of the other properties. So multi-family rentals, 47% return, 60% return, and pretty much my portfolio spends across the spectrum. So, and obviously I couldn't fit everything there. So that's just some of the deals that I've done.
And the great thing is you've used most of this using other people's money. And guys, that's why it's such a pleasure and an honor to have Mncedi on the call, because not only has he lived this, he's doing this on a day-to-day in an active capacity. So Mncedi, thanks for being here tonight. I'm going to ask you, if you don't mind, just to go on mute until your deals come up, just to ensure that the audio doesn't distract. Okay, so 2 basic sections of tonight's webinar. Working with private money, that I will run that session a little bit more. So I'm going to share with you how to set up a private investor loan and also a joint venture agreement using some live deals as an example. And then creative finance, this is where Mncedi and I are going to tag team. So I'll take you through what an installment sale agreement is and a back-to-back, and then he'll share some live deals and some live insights. So guys, jam-packed. This is really a valuable webinar. Thanks for being here tonight. Thanks, Mncedi, for organizing this, and a big thank you to Hapolo, my partner in crime, for making sure that everything in the back end always works and runs efficiently. So, working with private money, your investor category. Now, from my experience, there's essentially 3 strategies you can follow. You can loan money from an investor like you would loan from a bank. in which case you need a loan agreement. You can JV, so I give you a portion of the equity or a share in the business, but you give me money in return. Or the final option is you just source it on, or you wholesale it on. So you do the deal, you sell it to an investor for a fee. You don't actually have to put any capital down. Now, wholesaling and sourcing, I do have a couple of videos on my YouTube channel around that, so go check that out. Tonight's focus is on those first two: loan agreements, JV, partnerships. So let's start with the loan agreement. Now, a loan agreement we all understand. If you think of a traditional loan, let's say we've got our investor on the left here who is Mary. Mary approaches the bank for a loan on a property. The bank will look at her credit score, affordability, and look at the deal to make sure that the deal makes sense. If all of those check out, the money will then be loaned to Mary to be able to purchase the property. The way that the banks work is they'll give you a percentage loan to value and risk-based interest rates. Now, that concept of a loan agreement, which we all understand working with a bank, is the same way it works with an investor, with a few twists. So let's say Mary approaches Michelle, our capital rich or cash rich, time poor investor. So this is somebody who's maybe got a very high profile corporate job. They've got a lot of savings, they've got money in the bank, but they don't have the time to really go and invest. Or it could be a group of people like a stokvel, whatever it may be. So Mary is going to loan money from Michelle. Mary goes and approaches Michelle. Michelle's going to need a couple of things, right? She's obviously going to want to look at the deal. Does the deal make financial sense? And what return, what interest rate is she going to get from the deal? The higher the interest rate, obviously the more attractive for Michelle, because she's going to get her money to work harder for her. There are two key contracts that Michelle, the investor, is going to want to need. She's going to want an acknowledgement of debt as well as some sort of surety in case the deal goes bad. If those two check out, the interest is good enough, and Michelle feels comfortable in terms of the risks, she might loan the money to Mary, who will then obviously pay her back. So there's a rand amount that is exchanged. Michelle will give money to Mary, and there are three payment plans that one can take. So what I'm going to take you through in the next few slides is an example of a student of mine who I actually loaned money to, and he was able to loan that money from me because he got the deal validity right, he got the contracts in place, and he gave me a payment plan that I liked. So this is the student. You might have met him at the last webinar. His name is Dana Boonzaier. He is 2019's SA Property Investors Network Investor of the Year. And he asked me for a loan of $500,000 for 6 months. And I'm going to show you in the next few slides why I ended up loaning to him. And hopefully you can use that the next time you're approaching an investor, or approaching me or Mncedi or anybody else for a loan. One of the things that Donna does say, which I really appreciate, is that when you ask for a loan, you're not asking for charity. You're not begging someone for money and hoping you pay them back. You're offering someone a business opportunity. You're offering someone the opportunity to invest their money with you at a better return than they're getting in the bank, right? So the first thing that Donna did right is deal validity, right? The deal is cash flow positive. It's a really great student accommodation deal in Bloemfontein. And he was willing to offer me 20% interest per annum. Now that, guys, is pretty damn insane. 20% is very competitive. If I leave my money in the bank, it's sitting at 4 or 5%. He's now offering me 20%, which is basically 4 times harder than it's working in the bank. So the deal validity, the key thing that we're obviously looking for is the property cash flow positive, right? If it's cash flow positive, it means his rent and his tenants are paying back the loan, not necessarily me or not Donna himself. And then the interest rate. So those two things is what he got right in terms of presenting the deal to me. The contracts. Now these are two very important contracts when you're working with a private investor. The first one is the AOD, the acknowledgement of debt. So here is the AOD, the acknowledgement of debt, that Donna sent to me on WhatsApp. You can see it's 6 pages, and obviously you're going to go through that with a fine-tooth comb. You're going to maybe get your attorney or your lawyer to also review it to make sure you're comfortable with it. Essentially, the most important clause for me in that contract was clause 14, where you can see he is offering me a 10% interest over a 6-month period, which equates to 20% per annum. And the other key thing that I really like is in this contract, he stated that he has assets worth more than 2 million rand in his portfolio, which basically means that if he had to default on the 500,000 Rand loan that I'd given him, he's got 2 million Rand worth of assets that he's able to use or liquidate in order to pay me back. So that's comforting for me as the investor. 10% over 6 months is 20% per annum. The second contract that he got right, and this is also an important one that you need when approaching an investor, is surety. Right, the biggest risk that I have in investing in Dana is, what if he runs away with my money? Now, I know him very well. I don't think he's going to do that. What if the deal doesn't work out and it goes pear-shaped? Now, I lose out. No. Dana is the one taking the risk. He's the jockey. He is the one that should lose out if the deal goes bad. So, he's given me another contract where he gives personal surety. So you can see here he says Dana James Bunzaya binds himself personally as surety and co-principal debtor in regards to the responsibilities towards the lender, i.e. if the deal goes pear-shaped, Dana has to go into his personal capacity and do whatever he can in his personal means to pay me back. What he's also done, another just level of suretyship, is he's shown me the Lightstone reports of other properties that he has within his business. These are just 4 of them. And he's shown me that he's got the equity of 2 million Rand or more than 2 million Rand worth of assets that he can use. So he's personally given suretyship, but he's also shown me and given me confidence that his business could pay me back in the event that things go bad. Are you starting to see that, this is almost a no-brainer for an investor who's got a bit of cash in the bank that's not working hard. They just want it to work a bit harder. Now, the payment options. This is very important, and this is where loaning from an investor differs greatly than from loaning from the bank, right? Because the bank gives you one option. You pay monthly interest and capital over 20 years, and after 20 years, you've paid back the property. With investors, you can be a little bit more, let's call it flexible. So the 500,000 that I've loaned to Dana over 6 months at a 20% interest means that the total interest payment per annum is 100,000, but because I'm only loaning it for 6 months, my interest payment will be 500. So the total money that I'm going to get back in 6 months time is 500 plus 50,000. Now the way that Dana could pay this back is option 1, similar to the bank, to pay monthly capital and interest. So if the total payment is 550,000 Rand at the end of the term, and he's going to pay me every month a little bit of the capital and a bit of the interest, you can see the calculation under option 1, 550 divided by 6 equals 91,000, which means that Dana would need to pay me 91,666 per month for 6 months, and then at the 6 months he's paid off his loan. Right? Does that make sense? That's also kind of the concept of installment sale. The second option is that he can choose to just pay interest and then pay at the end of the term the capital in a lump sum. So the interest of 50,000 divided by 6 means that on a monthly basis he'll pay me 8,300, which is the interest, right? At the end of the 6 months, he can then pay the additional 500,000 as a lump sum. That's option number 2. Option number 3 is end capital and interest, which basically means that for the 6 months, Dana pays nothing, and at the end of the 6 months, he pays the full 550. Okay. Either way, me as the investor, I'm getting my 550 back in 6 months. It's more about Dana being able to negotiate and say, look, option 1 is going to kill my cash flow. Option 2 is okay, but the prime and the best option for an investor, and the one you should always be fighting for, is option number 3. Having a short-term loan in place where you pay the end capital and end interest at the end of the term. So that's hopefully an example for you as to how, banks and people are quite similar, but you can be a little bit more flexible with a private investor as long as you've got a good contract in place, an independent attorney, and you make sure that both parties are always happy and in win-win situations. So that's the end of an example of a loan agreement. And I'm sure that when Mncedi shares 1 or 2 of his deals, he'll probably talk about loans and partnerships, because the important thing about creative financing is you often have to use various mechanisms or avenues together. You might raise 100,000 from a Stokvel initiative, you might get 50,000 from your credit card, you might loan 200,000 from a colleague at work, you might partner with someone and give them 50% shares for a 1 million Rand capital injection. There's different ways in which you can pick money from different people to bring enough together to be able to execute a deal. The second option when working with private money is to partner with people. Now, I use this picture very specifically because when you partner with someone, it's like you're getting married. Right. Partnerships are not your really 6 month to 12-month ventures. That's where the loan agreement plays a very important role. The partnership is more about, we're going to get in bed together for 10, 15 years. We're going to go through the ups and downs of holding this property together. So it's better to have a partnership because there's a mutual win. If the profit is really good, the investor gets a good lump sum of that profit. But if the deal goes bad, the investor also loses money. So now that surety, that surety that Dana gave me in his personal capacity, that now falls away. If I decided to invest and loan or give Dana the 500,000 in exchange for partnership or shares in the business, I can't expect him to then still pay me back in his personal capacity if the deal goes pear-shaped. As an investor or as a partner, I now have to participate and take the risk of the wins and the losses. Okay. So here's a recent example. I think Wesley, I think Wesley did join the call. But a recent example is this 9-unit property in Turffontein. I did do a webinar about this a couple of months ago, if I'm not mistaken. Anyway, so originally when I found this deal on Property 24, I spoke to a good friend of mine, Thierry. We're both very active and interested in the property market, and together we decided to put 600,000 rand together. So he brought 300, I bought 300, and we created this company called Freedom Through Property. And the intention was to buy this 9 blocks of 2 bedrooms. All right. We went to the banks, we tried to raise the financing like I'd done hundreds of times before, and boom, it was rejected. Reason being is that COVID has brought risk, has brought uncertainty, has brought economic instability in South Africa, and the banks are a little bit more hesitant when lending to multilets. See, if you look at a multilet, and I'll take this Turffontein deal for example, that multilet is currently on one title deed, which means one document for the full property. Now, if I wanted to get lending on that property, I would need to sectionalize that one block into 9 different units, and i.e. create 9 sectional titles or 9 title deeds. Only when I've got the 9 title deeds would the bank be willing to finance. So what this means is I have to buy the property cash, sectionalize, and then refinance. Now, because we only had 600,000 and the deal is, it's a lot more than that, we had to get a third-party investor involved. So me and Thierry combined have the 600,000. That is a 30% capital contribution towards the total deal cost. We then found a third party through my YouTube channel and my initiatives, someone who's got a bit of capital that wants it to work harder for them. We've created a special purpose vehicle or company, and we're using that company now to buy this block. So can you see again now, the partnership with me and Thierry is one foundation of this structure, but then now we've brought the third party in to cover the additional costs. Okay. Now the numbers of this deal make a lot of sense, and that's why I think the investor decided to take a chance with us. On a cash purchase, you're looking at a 36,000 rand rental, 13,000 expenses, cash flow of 23, and a return on investment for 12%, which is not bad. It's pretty decent. How we were able to convince the investor. Now, this is really important because if you're looking to get a partner or you're looking to get somebody committed to your business, you have to give them enough to feel comfortable. And the two things that I think and I believe really won his belief in us is we were able to provide proof based number crunching, and we were also able to provide good solid contracts. So when I'm talking about proof, these are just some of the documentation that we had available to be able to present to the investor to prove that it's a good deal. We had the annual financial statements of the year 2019, which was signed off by an independent accountant, so you knew they were accurate. We had proof of expenses with COJ bills, with insurance schedules. We had Lightstone reports, rent rolls. So everything that we said, every input, we were able to justify with some sort of documentation to say, yeah, this is why we said 5,000 for rates and taxes. Here's the proof. So then when you start looking at the numbers, you get confidence in the numbers because you know they're backed by something real. The contract portion, we put together a really nice slick shareholders agreement. I've obviously just taken away some of the sensitive information, but the first shareholder and Freedom Through Property, which is Thierry and I's business, and now the third company, which we've created as a special purpose vehicle to be able to invest in this property. We are also providing him with a special loan. So as much as he gets to participate 50-50 in the cash flow, we're also going to give him a 5% interest on his loan. So the 1.5 that he's putting in, we're giving a 5% interest to, which is what he's pretty much getting at the bank. So it's not like he's got any opportunity cost. And then on top of that, he also gets to participate in the profits. Of course, if there are losses, then he also takes part in the losses, right? That's part of being in a company. We've also given him 51% voting power until the deal has been refinanced because he's putting more money in. We wanted to secure him and give him a bit of security. And then as soon as we've refinanced, we will go to a 50-50 split. And once we refinance, there's the possibility that we could pull almost all of our money out. Depends what kind of lending and financing we get. We have been pre-approved for this loan to the value of about just over 2 million. You can see there. Now we're buying for 2 million. We've already got pre-approved of a loan for 2 million, which means once we refinance, we can get that full 2 million out. If we're able to finance at a higher rate, let's say we can value the property at 2.83 million, we can maybe get a loan to value at 2.2, 2.3 million, and then we take all of our money out. Right? That would be the goal. So once refinanced, we'll have between 0 and 300,000 Rand in this business or in this deal. The final part, of course, when you're working with remote investors, and this investor is someone that lives outside of South Africa, it's kind of hard to buy something you've never seen or touched or tasted. So what we did do is we spoke to one of the best Gauteng inspectors, and they went and did a comprehensive and very detailed report of every unit in the property. So there are the 4 parts to the report, and each report had an enormous amount of detail as to every single fault, crook, cranny, everything within the property, so that we knew exactly what we were buying. Obviously, it's not in perfect condition. If you look on the top left, you can see that the geyser's too close to the ceiling, which means in order for us to get the sectionalization across the line, we'll probably have to lower each geyser. That's a cost of about 30,000-40,000, so we had to include that in our numbers. And we had to be open with our third-party investor. We had to, with our partner, we had to basically tell him, this is the story. Are you happy to take on this risk? And that's the key thing, guys, is when you bring on a partner, it's not that they're an angel investor and are just giving you the money. Now, their decision matters just as much as yours. You have to be able to tussle and be able to communicate and debate, because I might have a perspective and he might have a perspective, and we'll have to be able to come to a common ground or common understanding in order for us to move forward. So yeah, this is a really detailed report, which was great. And then we've gotten now to the point where we're setting up roles and responsibilities. So Terry, with his background, will be the CFO, I'll be the CEO, and our third partner will be the COO. And together we're going to build now, hopefully a property empire. So that's the idea of partnerships. It's about bringing in people who have capital, but then you give them an equity stake, which means they get to participate in the wins, but they also get to equally participate in the losses, and they have to understand the risk and take that risk with you. Okay, that was working with private money. I'm sorry if I spoke really quickly. I just have a lot of content, and I want to make sure that this is jam-packed with value. We do record all of our sessions. They'll be on our YouTube channel, on the My Property app YouTube channel, or on my Lawrence Property Coach channel. So just subscribe, click that notification button, and you'll never miss out on anything. So creative financing, we're looking at 2 specific strategies here. The first is the back-to-back, which is a very sexy, very fun, very adventurous strategy. Personally, I've never done a back-to-back, but we've got somebody on the call here tonight who has. So I'll take you through some of the theory of what a back-to-back is and how to apply it, and then Mncidi's going to jump in and he's going to share a live deal that he's currently and actively working on, and just explain to you how he structured it. So back-to-back, how does it work? Well, it's really about bringing a distressed seller and a hungry buyer together for a transaction, for a property transaction, and you take a margin of that transaction. So I find investor A, seller B, I broker a deal between the two of them, almost like sourcing. It depends. You might take ownership for a while and then sell it, or you're able to transfer it without it ever registering in your name, and you make a margin off the sale. Now, I do want to just let you guys know that this needs to be safe and done legally. If you're seen earning a commission by the Estate Agents Affairs Board of South Africa, the EAAB, it is seen as illegal if you don't have your real estate agency license. Maybe we can ask Mncedi when he's doing his analysis of his live deal what he did from a legal perspective. But please make sure that you're always following the law. And when this video was recorded, maybe the law has changed, so please just make sure you've got the right advice and the right professional on your team to give you that advice. So how does it work? Let's say that you've got your investor here on the left. We've got a motivated seller, and then we've got a buyer. Now this buyer could be an investor or it could be a first-time buyer. Right, now the first step that you as the investor need to do is you need to go and find a distressed seller, someone with a property problem, for instance. Okay, once you've found them, you need to understand and sympathize with their needs. Are they selling because of a divorce, financial troubles, difficult tenants, accidental landlord, whatever it may be? You need to understand that need so that you can speak to it when negotiating. But then on the flip side, you need to run the numbers, right? This is not an emotional decision where we're trying to help people out of problems. We're trying to make money by solving somebody else's need. Right. So once you've understood the need, you can use Lightstone, TPN, My Property app. There's a whole bunch of tools for you to use to run the numbers. Let's say that your Lightstone report tells you that this property is worth 1 million rand. Right. Now you can start to work out what your initial offer is going to be towards the distressed seller. Because the resale value, what you can sell it for, 1 million, minus what you offer to the seller is basically your profit. Right? If it's worth 1 million and you're going to offer 700, that means when you buy at 700 and you sell at 1 million, the difference is 300,000. That's your margin. That's the profit you make. So you've understood the need, you've run the numbers, you know what you're comfortable with. Now you propose an offer and negotiate. Now I'd probably go in at about 600,000, depending on the level of motivation of the seller. They might accept it, they might reject it. That's part of the negotiation game. Once they've accepted and they've said yes, you need to secure that offer with an OTP, and this is the exit clause that would work well. So this offer is subject to finding a willing cash buyer at X Rand. If no willing buyer is found, this offer will lapse in 4 weeks. So what you're doing here is you're giving yourself a 4-week period to go and find that buyer that you're going to back the strategy on. Right, you've got the first piece of the puzzle, now you need the second piece. You've got the distressed seller, now you need the hungry buyer. Okay. Now if you're trying to find a first-time buyer, looks and emotion is everything. It must look like a nice brand new unit, must look clean, and you must try and get them to buy in emotionally. Right? That's the strategy when you're looking at a first-time buyer. If you're looking at an investor, the investor wants to see what's the financial benefit of buying this property. This is where you need a proposal with an executive summary. You need the numbers laid out, area research with reports from TPN and Lightstone. You need the signed offer to purchase, quotes and supporting documentation, a risk mitigation plan, and how the investor can exit from the deal. So depending on who you're trying to sell to, right? If you're just selling to a first-time buyer, just, pictures, make sure it looks nice and that it meets their needs. If you're looking at an investor and selling it to another investor, make sure it's a good financial deal. Now, once the investor buys in, or the new buyer buys into your idea, you need to sign an agreement with them. And in that agreement, you explain the terms and conditions of your relationship. Now, the terms and conditions would be that you're going to sell the property to this person at that price. Let's call it 950. So you've now agreed 600 here with your seller. You've agreed 950 with the buyer. The difference, the margin, is 350, excluding or minusing your transaction cost. Now you could potentially have to transfer the property into your own name and then quickly sell it to this new buyer. You can potentially not even transfer it into your name and just directly link the buyer and the seller together and make a margin off that sale. So there's different ways you can structure this. Now once you've got those two documents, you've secured the deal with the seller, you've also secured the deal with the investor, you can now introduce the two. and they'll sign a new offer to purchase with new terms and conditions. So this is if you're planning to not transfer it into your name, but you rather want to just introduce them directly and take a margin, take a commission, or take the fat of the deal. So if we just look at the types of contracts that are common in these scenarios, number one, you sign the first offer to purchase to secure the price. Number two, you sign an investor agreement so that they know what they're paying for the property upfront or whatever the payment terms are. Now you could, again, buy it from the distressed seller, have it in your name, and then sell it to the new investor. You will incur obviously buying costs like your transfer fees and bond registration costs, etc. Or you could flip it into a sourcing agreement where you introduce the seller and the buyer directly with a new offer to purchase and take a commission or take a percentage off the deal. Now remember, please go and check with EAAB, the Estate Agents Affairs Board, and make sure you've got a good attorney, and always be safe, be legal. Now timing is obviously crucial with these things. I've never done a back-to-back deal, but what I've heard from the people who have done it is you have to be at the right place at the right time. And I think that's what Mncedi has done really well with this deal that he's going to share with us. So just before I get Mncedi on, remember it is needing to be a win-win scenario. You obviously don't want the seller or the buyer to be hard done by the deal, because your reputation will precede you. The next time you try and work with this buyer and you've given them a bad deal, they'll remember it. But now, that is the basics of back-to-back. I'm going to hand over to Mncedi, and he's going to share with us a live deal that he's currently working on that is a back-to-back. Over to you, sir.
100%. Thanks, Lawrence. Appreciate that. So, ladies and gentlemen, here is an example of a deal that I'm actually in at the moment. Simplistic deal. This guy came through my website. Thank you for closing. For closing on the property, SA Home Loans. They're taking the property because they can't keep up with the mortgage payments every month. Of course, it's in Pretoria, normal family house, nothing special, right? But what Lawrence spoke about was, he said you need to pay attention to the motivation. And as you can see from the pictures, I mean, there wasn't really anything special. Yeah, there's a 3-bed, 2-bed house, but there's a bachelor pad with some storage at the back that you could convert for rentals if you needed to at a point in time. But it's a just standard house.
What was the motivation that you were able to secure this deal?
So the problem there is that because the bank wants to take the property, so I'm dealing with a father and son situation. The son is negotiating on behalf of the father. And the son says the father has been there for 30 years. They don't want to lose the house, but they are going through a financial difficulty at the moment, and they've got equity in this house because this house is paid up, right? Well, this house has got a low amount owing at the bank, so they would like to release some equity so they can work on the business to get into a better financial standpoint.
So the idea is, instead of the dad losing the property to foreclosure, is you buy it temporarily until the son earns enough or has enough money to pay a higher price and actually maintain and keep the property. So it's the timing thing that we spoke about, just being at the right place at the right time where they've got a need and they'll willing to sell it to you at a cheap discount.
Absolutely. So in your previous example, you would buy from the seller and then you would go and find a buyer. In this scenario, I bought from the father, then the son bought from me. So I signed 2 OTPs at the same time, where I am buying on this one and I'm selling back to him on this one at a higher price. And we're going to go through the numbers just now to see what that looked like. So the value of the property was stacking up, if you can just check the numbers there, was stacking up at around 950. So that was my conservative estimation. Obviously, houses they were selling well over R1 million. So I want obviously mine to go a bit faster. So you kind of value it just a little bit below the median, right? So he then asks for 800,000 because that would allow him to get enough cash out of the property to be able to rehabilitate his financial standpoint. I was offering around about 550 to 600, and we weren't really agreeing. and we landed up agreeing at about 700. Now, the way we got to 700, as a matter of fact, this deal was not happening anymore. It was one of those, it takes over a couple of days, probably took about 2 weeks or so to negotiate, where we're like, look, man, anything above 600,000, I'm going to be doing this for free. I'm not going to make any money. And through listening to the problem is I just need to rehabilitate myself. I'm going to buy the property back in due course. So I don't need to renovate this property. I don't need to maintain this property. All I need to do is sign one piece of paper and sign another piece of paper. So we agreed at 700, but to release the cash, I had to take transfer of the property so that the bank then pays out the equity to the son. So for that, I paid bond fees and transfer costs all into the deal at 26,000. Now, this is what I paid out of my pocket. But there's still the problem of the bank 700K bond, right? So I paid a call because it's now maxed out at the bank.
Sorry, Mncedi, the audio isn't sounding so good. It's just you wanna try speak again? Let's see if it's maybe fixed.
Yeah. So yeah. Let's see if is that getting better.
It's a bit still the Terminator. There we go. There we go. It
seems fine.
yeah, it's working again. Yeah, it's working again. Go for it.
Okay, I'm taking off the earphones. So what happened was, obviously, I'm bonding the property for 700K, but I can't get the bond. So I paid a call to a friend of mine who works for a bank who can get the mortgage very, very, very cheap because he's going to get staff rates. So he bonds the property for me. I said, we're going to form a partnership and buy this property together. I will pay for the closing costs. You hold the bond for me for a 12 months duration. And when we exit, I'll give you 40% of the deal. I'll take 60%. And he looked at the number and he said, the only thing I have to do is sign a piece of paper and apply for a bond. I'm in. So there we have a deal. So we actually purchased the property and took transfer. Now we don't want to kick the father out of the house. So we agreed in the OTP that the father is actually going to pay 9,000 rands rental on the property while they are still living there before they buy it back, right? So now, as you can see in phase 2, which is what we're in at the moment, we're going to be getting a net cash flow after, obviously, the rent is 9 grand OPEX, and then you're left with about just over 3,000. And over a 12 months period, we're going to have a net flow of about 43,000 there. We've sold the house back to them at 950. Total income is around 993. Now, we took a bond of 700. That bond amortizes because the father, through the rent, is paying it down. So it amortizes down. So when we exit, it's going to be about 681, and plus the 26K that we paid on the property when we closed. So the profit that we're making on this deal is 285,000 in a 12 months period. Now, the key thing here is exactly how Lawrence explained it. You get a seller, they've got a problem. The very key thing that you're looking for, especially, I must emphasize this, when you're dealing directly with the seller, you're not there to make money. Money must become a secondary thing. So what is the problem you have? And if you can try and craft a solution to the problem, then you layer your profit on top of that. You then come up with a win-win situation. In this case, it just so happened that the seller effectively became the buyer at the same time. So I kind of back to back it, and I was sitting in the middle collecting the money.
It's a brilliant case study and example of a back-to-back. As long as you've got the buyer and the seller and you can meet them in the middle, making sure that everybody ends off on a win-win. Thanks, Mncedi. Guys, I just want to also remind you that you can post questions. At the end of this call, we will have a question and answer session with Mncedi. So anything you want to ask about the deal, about the theory, about the concepts, please post the questions on the chat. Obviously, at the end of this, we want to make sure that all your questions are answered. Now, the next type of strategy that is on the creative side, and sorry, Nate, I'm just going to ask you to mute yourself again until the next deal comes up. Thanks. The next creative strategy is installment sale agreement. So now an installment sale agreement is really just an agreement between a seller and a purchaser where the parties agree for the purchase price of the property to be paid to the seller in more than 2 installments over a period between 1 to 5 years. That's really what an installment sale agreement is. Now, we all know what an installment sale agreement is because if any of us have bought a car or have had somebody buy a car, we know that most cars are bought using an installment sale agreement. Right, so your car purchase, we've got a BMW here, and let's say we've got, the CEO of a big company. I'm just going to call him. Oh, sorry, somebody's coming home. I'm going to call him Michael, just for example. Now, let's say that Michael wants to buy this car. There's a couple of options that he has. Option one is he can buy the car using an installment sale agreement of 5 years. So the salesperson who's trying to sell him the BMW says, you know what, we'll give you the 500,000 to buy the property and you pay us back over a 5-year period, which means every month he'll probably need to pay 10,000 Rand. After 5 years, he owns the car, right? That's an example of an installment sale, multiple payments being made over a period of time. Option number two, the second option that the salesperson provides Michael is for him to pay a small deposit or down payment and then get a 300,000 Rand loan, which again will be paid over a payment term, but this time the term will be 2 years. This means that now Michael has to pay 16,000 Rand per month, and after 2 years he is the owner of the car. The third option could be that the installment sale agreement says that he needs to pay 500,000 plus interest over a 2 installment period. So in the beginning of the year, or when he first purchases the property, he puts 300,000 Rand down, and then 6, 12, 9, 15, 2 years, 3 years, 5 years, a couple of months later, he pays the other 300,000, whatever it is that they've agreed. Does that make sense? So an installment sale agreement at its simplest form is an agreement between seller and buyer on how long they're going to take to pay off the property, right? So it's actually not a very complicated strategy. So with that in mind, let me jump back to Mncedi and he can share this latest deal. And this is the KZN deal. I think it's going to be a massive one. So Mncedi, over to you.
Awesome. Thanks, Lawrence. Okay, so this one is quite interesting. So there's a big property in Pietermaritzburg. This guy has owned this thing for a couple of years, and he would like to exit it. For the last couple of years, probably 5 years or so, the property has been vacant, and it's about 60 flats, and the idea is we're going to turn this into student housing. Now, as you can see, because it's so distressed, nobody has actually lived in here, so it will need a little bit of work. And what happens is, and this is very important because Tiamo just asked, where do we find? So it doesn't necessarily need to be the seller that is distressed. It could actually be the property, as you see in this example, for you to be able to craft a creative strategy to close on the deal. Now, this guy is moneyed. It turned out when I Googled him that he's one of the guys who's a big shot in Pietermaritzburg. So he doesn't really need the cash, but the property is distressed. So there's the problem, and we're going to solve the problem and craft a deal for ourselves. So here's what happened on this deal. This fellow is asking 7.8 million. Okay, I offered him 6 million on the deal because it would be sweet for me at 6 million. He doesn't need to sell at a loss, right? So he couldn't agree. We eventually landed around about 7.5 million, which was really good enough for me. He was happy. I could make the deal work. So what I then said is, look, man, the property is going to be a challenge to get conventional financing for it because of the state of the property. Obviously, the bank or any other institution is going to come and do evaluation on the property, and we're going to have a problem. So what we can do is I'll give you still the full amount of 7.5 million, but all I'll do is I'll offer you 1 million Rand up front, So we are going to agree on the term on when you're actually going to get the R1,000,000. I actually offered him about 30 days after we've signed the OTP, right? So R1,000,000 is seller deposit that he gets up front. Now we're left with 6.5 million. And I said, the 6.5 million, I will pay it back to you in installments every month for 36 months until we've cleared the debt. How am I going to do that? What you're then going to do is you're going to hand over the property to me. I give you the million. So now, because he has handed over the property, he's left exposed. We're taking his property with just a million. I said, no, we can solve that problem as well. I will pay 73,000, as you can see then, to go and register a bond over the property so that you are covered. If we don't ever pay you back, you've got a bond over your property, you can take your property back. So now I've solved for the money to pay back the investor. The investor has got protection that they're not going to lose their house because they've got a bond over the property. And, I then got my team to run some numbers to actually turn that property. That property can house about 150 students at about 2,900 per bed. So we will need to actually make it one of the best properties there. I'm talking uncapped Wi-Fi. I'm talking permanent stuff that looks after the place. I'm talking proper managers that look after the place and that sort of thing. So hence the fee, the cost is about 6 million to get the place done. And there's a 9 grand, other costs for legals that we need to factor in there. So all into this deal, to get in, I need about 7.1 million rands, right? Let's look at what we're gonna do once we've turned this property around. So what's gonna happen is we're gonna have 150 students in there that are gonna be giving us rental income of 435 per month. We then need to pay back the installments to the seller of 180K over a 36 months period to clear off the 6.5 million. There's obviously operational expenses that we need to take care of, maintenance of the property managers, Wi-Fi, DSTV, lights, you name it. You know the operational expenses for a real estate deal. And the net cash flow in phase 1 is going to be just short of 100,000 net into our pockets. Now, if you had taken 7.1 million and done the deal and you got 94K per month, their return on the investment is 43%. Ladies and gentlemen, I am going to challenge somebody on the call to go and find an investment vehicle. By the way, before I even finish that sentence, by the way, once we've spent 6 million on that building, the after repair valuation of the property is going to be lurking around 16, 17 million. So we're almost going to triple the value of the deal. So this is just phase 1. And obviously 36 months later, we've got, let's say, a 16 million business. We don't have the installment of 180 a month. So you work out how much that 94,000 becomes after that.
That's crazy.
So that's the kind of deals that
But now, my understanding, Mncedi, is that this deal you are currently still looking for finance. So if there's somebody on the call or somebody that watches this on YouTube and they would like to get involved, there's a possibility for them to loan you that money. Is that correct?
Absolutely. So if certainly there's somebody who's willing to, who's got some capital that would like to jump with me onto this deal, I'm certainly open to crafting some partnerships, man.
And I'm sure you've got all the legal agreements, you've got the reports, you've got the numbers, all the due diligence that an investor would want. I'm sure that if they had to request that from you, they could get that, eh?
Yeah, absolutely. That can be provided. And I mean, it might not necessarily, I understand the number on this one is a bit big, 7.1 million. Look, yeah. It might not necessarily be on this deal, but in general, I've got properties and deals that float on my desk all the time.
and take on some questions. Okay, so the first question here is, where do we find distressed sellers? So do you want to tell us about your marketing funnel and how you find these sellers, Nate?
Yeah, 100%. So I do social media marketing, Instagram, Facebook, run ads. Are is the bank trying to take your property? And I think we covered this in the previous webinar that we did together. So those ads aren't very expensive. You form a company, you create the necessary pages. It's just admin work to maintain it, and you start getting these leads, and make sure that obviously you're legit and you're doing all the right things. You handle people with care, because when we say these people are distressed, people are distressed. People are going through divorces. So what you want to be very sensitive. Okay. So I do marketing. I certainly network with a whole lot of estate agents out there. Not all of them are bad. Actually, there are some good ones that give you some really good deals, and they are able to work with you. I must say that it's not very easy when there's an estate agent in between you and the seller. It's always easier to craft the solution when you're dealing with the seller directly. So marketing certainly goes a long way in sourcing some of those.
Yeah, I think you need to have multiple. You have to have multiple approaches. So, are you using estate agents? You're looking at Property 24 private property. You've got some online marketing. Some Google ads, Facebook, Instagram, joining and attending networking events, talking to people. You got to have 5 or 6. Now, here's a really great question: what kind of interest rate do investors expect when you loan them money?
So, a good starting point, it'll take you 15 minutes. You open up all the banks from Capitec, African Bank, FNB, Standard, all of them on the internet. And you look at the kind of money that you would like to borrow from an investor. I'm looking for R500,000. If I, as Mncedi, I had that R500,000 and I was keeping it with one of the banks in the country, what would that money be earning at the bank? You will find numbers like 4%, 5, 6, 7 if you're lucky. You know what I mean? But you're gonna have to fix it for 5 years. So now you know what an investor who's got R500,000 that you're looking for is earning on that current cash at the current rates. And now that's when you then can craft a proposal for the investor. Say, look, roughly you should be getting about 6% at the bank. I can triple that. I'll give you 18. And generally investors are hovering around anything from about 12 to 20% when it's expensive. So the midpoint being around about 15%.
Perfect. Here's another great question from Umpo. So Umpo currently has a property with 3 flats. Total income making about 15,000. She wants to now move out of the property to be able to get more rental, but now she's getting a problem getting a loan to buy somewhere else. So she's obviously bought this property that she currently owns with a bond, and maybe it's gotten to that point where the affordability is a bit of an issue. I know you work for a bank, so you'd be able to also bring that kind of perspective in. But what are her options, assuming now that the bank won't loan the next buy?
Yeah, so this is where now we need to start thinking creatively, right? And the one simple thing that you can do, I don't know if the property is in her personal name or it's in a business, but you need to be able to demonstrate your financial status, I suppose. And that step one is when you're looking for finance. You need to present your finances in a way that demonstrates that you've got disposable income. And in this case, she's already got 3 flats, so she's already getting income which supplements whatever income she already has. And obviously, if that's not sufficient, you certainly can start venturing into some of these strategies that we're talking about. So one, you could partner with somebody who does qualify. So you go and find the deal yourself. you find somebody who qualifies for a bond. For instance, the deal that I did a back-to-back on, I couldn't qualify because I'm maxed out. So I found somebody who does qualify. I said, but here's the stake that you're going to get into this thing. I just need you to hold a bond for 12 months. Can you do that? It might not be for 12 months in your case. It could be you want to own a long-term rental, and you find a person, a lot of investors who don't have deals who can qualify for a bond, and that will be willing to partner with you on the property. So obviously, depending on what type of property she's doing. If she's doing a flip, certainly investors are willing to get in short term on, again, 9 to 12 months, borrow you the 500,000 and then get it back out, and you make an investor money. Now you've got a partner that can continuously recycle money with you. So there are multiple ways you certainly could do installment sale agreements, because you certainly don't need a bank in that case. The seller becomes your bank, and you just take over the property. It's already bonded, and you just make sure that you profitably service the mortgage.
Nice. I would also maybe just recommend that you go look at some alternative finance options. So, you obviously got the Standard Bank, the ABSAs, and the big boys, but maybe you want to consider a company like TUHF, TUHF. You want to look at Sentinel Homes, Combined Finance. Some of these less well-known banks tend to, invest a little bit more aggressively into property investments. Our final question before we run out of time, Mncedi, what are the risks and the challenges of successfully executing a back-to-back deal?
So the obvious one is that you've secured the property, the risk, right? And you've factored into the OTP one that you will need, call it 45 days to go and find a buyer, for instance. And the risk is that the 45 days runs out and you haven't found the buyer. So you need to take cognizance of that. And would you be able to then, by default, take over the property in that case? If not, then you will need to put in some suspensive conditions in your OTP to say, look, this is suspensive on me finding the buyer within 45 days. Should I not, this OTP is null and void. Obviously, your legal partner will assist you with crafting the suspensive conditions appropriately.
Nice. Perfect. Thanks, man. There are no more questions, I see, unless there are one or two that come out right at the end. But it's 7 o'clock on the nose. I think we handled the timeline really well. Mncedi, it was an absolute pleasure, man, to see you not only just investing but thriving and making this happen. Especially, knowing that you've come from a lower income background, and you've just, you've never let that hold you back. And I think that's really awesome. And you've been definitely an inspiration for me today, and I'm sure, and I hope, an inspiration to the other people on the call today. So thanks so much, man.
Next time you must notify me, man, so I can get my hairline done nicely. Man. You can't just spring this up on me. The ladies are on the phone.
You know what's funny, Mncedi, is I told you about this last week already, brother. I told you about this last week. We had a test call last week. Now you're trying to make me seem... Nah, bro.
I'm a busy guy. What can I say?
Nice. Umpo's asking if she can call you directly or privately if she's interested in working with you on a deal.
Sorry, say again?
Is Umpo allowed to call you, or if they want to, we shared your contact details, you're comfortable with people to call you and email you off this webinar?
100%. 100%. You can call me anytime, man.
For those who do want to contact me, please just go through my website. I've got a scheduling system there which allows you to book out a time slot with me if you want to have a quick consultation. But otherwise, our video will be recorded and on YouTube. Again, thanks to you, brother. And if you do have any deals, guys, or any capital that you want to invest, please go to Mncedi. He's a great guy. He knows what he's doing. He's obviously experienced, and your money's in good hands. Cool. Cheers, everyone.
Thank you so
have
much.
A good night.
Cheers.
Bye.
Bye.
Are you tired of having more month at the end of your money? It's time to venture into property investing. And although it may seem scary, don't worry. We've created tons of resources to help you get started. From tools that help you analyze deals to online training courses to one-on-one specialized coaching. Click the link in the comments below and get started today.